This week in AI, Alphabet just asked Wall Street for the largest equity check in its history to build more of the AI infrastructure the world is scrambling to buy. I'm Joshua. Let's get into it. On June 1st, 2026, Alphabet announced plans to raise $80 billion in equity to expand AI infrastructure and compute, its biggest capital raise ever. The company said in a press release that it is experiencing strong demand for its AI solutions and services from enterprises and consumers at levels that are exceeding the company's available supply. $80 billion in one filing to keep the lights on for the AI boom. The deal is structured in three pieces. $10 billion comes from a private placement by Berkshire Hathaway, split evenly between Class A and Class C, stock priced at $351.81 and $348.20 a share, both below Monday's close. Goldman Sachs is the placement agent. $30 billion hits through concurrent public offerings, including $15 billion in mandatory convertible preferred depository shares. The remaining $40 billion will trickle out through an at the market program starting in the back half of 2026. Joint bookrunners are Goldman Sachs, JP Morgan, and Morgan Stanley. Berkshire is the headline counterparty, and the size of the bet is the real story. Berkshire has been quietly building an alphabet position since the third quarter of last year, more than tripling it just last month to roughly $16.6 billion, making it one of Berkshire's largest common stock holdings. Greg Abel is now putting another $10 billion on top. Bill Stone, CIO of Glenview Trust, told Reuters this additional purchase underscores that Abel believes Alphabet will earn a reasonable return on its AI Capex spending, even with the firm issuing additional shares. That is a long term vote of confidence from the most patient capital in the market. The Capex context is what makes the number land. In April, Alphabet raised its full year Capex range to between $180 and $190 billion, and it has stacked more than $85 billion in debt across six currencies in the past year. The hyperscaler Capex race is now expected to clear $700 billion combined for Alphabet, Microsoft, Meta, and Amazon in 2026, with analyst estimates for 2027 pushing past $1 trillion. Alphabet stock fell roughly 1.6% on the news as the market weighed the dilution. But Sundar Pichai was blunt on the constraint. Asked what keeps executives up at night, he said, compute capacity, be it power, land, supply chain constraints. How do you ramp up to meet this extraordinary demand for this moment? The $80 billion is Alphabet's answer. The takeaway is simple. The AI build out is no longer being financed by cash flow and debt alone. It is now being financed by the largest tech equity raise in history, anchored by the most patient value investor on the planet. To fund a compute shortage the entire industry is racing to close. That's the wrap. Sources in the description. I'm Joshua. Catch you next week.